I thought tonight, seeing we've gone through a few different, fundamentals of trading and everything. So we've got support and resistance, trend lines, market structure, a few continuation and reversal patterns. That's, as far as I'm concerned, the real basics of trading. Not just the basics, but you do need to know that, but you don't necessarily need to know more, even though we might have only really just sort of touched on them. I think if you've got an understanding of all of those things, you're probably ready to start trading for real. So I thought tonight, and probably next week as well, we'll go through a couple of the different trading platforms, exactly how to use them and everything. So tonight I'll go through Binance and Binance futures because somebody suggested that. We'll go through Binance anyway. And next week we'll go through the MT4 platform, which is one of the main ones people use for Forex trading. So let me share a bit of screen here. Okay, this is Binance, one of the many, many pages of Binance. Okay, so Binance, it's just a cryptocurrency exchange. It's really the largest one there is in the world, definitely the most used one. And we're not going to get through everything that Binance offers because it's extensive, as you can imagine. So being a cryptocurrency exchange, if you can do more than just trade on Binance, but we're mostly going to be talking about trading here tonight. So yeah, you're just trading different cryptocurrencies. You'll either be trading them against Bitcoin, trading them against US dollar Tether, or various other ones, but no real fiat currency involved whatsoever. I don't want to get into too much other than the trading and everything, but I will go through just quickly what you need to do to get started. Obviously, you need to get some funds into Binance. Now, if you've got a friend that already has a Binance account, you can get their referral link. Not the end of the world if you don't, of course, because unless you refer a lot of people and they put quite a substantial amount of money in it, you're really not going to make a lot from the referral program, and not enough to be really worthwhile. But if you've got a friend that's already has a Binance account, you might as well give them a few little cents. Plus, I think I haven't even kept up, but I think there are possibly even some advantages to doing so for yourself, like reduce fees for the first few months or something like that. But if you have crypto somewhere else, you can just open up a Binance account and you can send that crypto directly to your wallet. So the fiat and spot wallet, that's just a wallet drop down. So if you had Bitcoin, let's say on CoinSpot or CoinJar or literally anywhere else in a hardware wallet, anything, if you've just got crypto anywhere, you can just come to this page here. You can just search up whatever type of crypto you happen to have. We'll go with Bitcoin. And if you come along here to the deposit page, click on that. You obviously just select there's a lot of different options these days. Normally, if you're going to be sending Bitcoin, you're going to just send it on the Bitcoin network. But some of the major exchanges and a few other people, they offer a few different networks that you can send it on. If you're just sending it from CoinSpot or CoinJar or your own personal wallet, then you're just going to be selecting the Bitcoin network. If where you're sending it from, if you don't know whether it's the Bitcoin network or one of the others, it's going to be the Bitcoin network. Otherwise, you'll see a lot of different options there. And you just got to copy this address with this button, and then you go back to wherever you have your crypto, and you withdraw it out of there or send it to here. Sometimes I'll call it a withdrawal, and you're withdrawing it to here. Sometimes, like with CoinJar, they'll say you're sending it to this address. But either way, that's the address you copy and send it through. And that's all you need to do. Open Binance account, and then you can send your crypto straight to it and you can start trading. If you don't have crypto anywhere and you want to buy some through Binance, you are going to have to do various different sorts of KYC, know your customer, just the ID verification like you need to do with anything financial pretty much, but definitely anything to do with fiat currency. And they have 3 levels of KYC, basic, intermediate and advanced. Myself personally, I haven't done any KYC on mine, as it says just here, unverified, because I haven't bought crypto using Australian dollars. I've never bought crypto through Binance that way. I just already own some. But if you want to buy it through Binance, you will have to at least do the basic verification. It's very quick and easy though. You've just got to provide, let's see what they provide. You just need to put in your driver's license details and your name and that's basically it. They'll just double check online that that's who you are, and that'll be done. And for most people, that's going to be enough. You'll be allowed to, once you've done that, you'll be allowed to deposit up to $8,500 a day. You can and withdraw that much a day as well, 85,000 a month. Unlimited crypto deposits, and you can withdraw up to 2 Bitcoin a day. At current market value, 2 Bitcoin a day means you can withdraw 80,000 US dollars worth of Bitcoin every day. So for most people, that will be enough. The extra verification levels, they're just going to require more. They'll have a facial verification. You'll have to send in selfies of yourself and government IDs and a few other things, but it just increases the limit. So from 8.5 daily to 20 daily, you get the option of peer-to-peer transactions, and you can withdraw up to 100 Bitcoin a day. And then you can go up here and you can still only withdraw 100 Bitcoin a day, but you can withdraw 200,000 US dollars worth a day. So it just increases your limits. That's all that's for. If you're trying struggling through how to find your way around Binance or doing the verification or anything, you can just sing out at any stage, no matter whether you're watching this live or the recording, and I can help out a bit. But it is usually pretty easy, especially this one. They usually just verify it. It says a day, but usually it's a lot less than a day, just an hour or so. And then once you've done your ID verification, you can come and buy some crypto with a bank deposit. So just sending funds directly from your bank account, using your credit card or whatever. The other one's peer-to-peer, and if you've got cash balance in here already, but these are the two. If you have never bought Bitcoin or you haven't funded Binance yet, let's just go with the credit and debit card. And so I'm going to buy some, I'm going to buy some Bitcoin with Australian dollars. And let's say I want to buy $1,000 worth, and I click continue. It won't let me because I haven't done the basic verification. But obviously it just takes you to the usual credit card payment page and you can purchase some. But once you've purchased some, or you have sent it from somewhere else, then your fiat and spot wallet will be where it all ends up. And I won't have very much in here at all, just some little bits and pieces, these are just some cryptos that I have here. All of the Ethereum and Bitcoin and Cardano and major cryptos that I'm trading, they're actually on the futures trading platform, which is part of Binance. And what have I got? If you have It's all good. Let me just go to. So that's the fiat and spot wallet. You've got a few different choices for trading. Convert, that's just very, very easy. You can just do that from here. If I wanted to convert my poly, just I can't do it on that one, but if I wanted to convert my Matic to something else, I can just click on convert. And it's just like this. I just have to drop down and select the poly that I'm converting there. And if I wanted to convert it to Bitcoin, I'd do that. All pretty simple. Just speak up if I say something that doesn't make sense, like always. So the other options are you've got your, that's just converting. You got your classic trading platform and advanced. I'm not even sure if there's any real difference between those two these days, not much anyway. But other than that, you got your margin, you've got your, so if you're in a fiat and spot, we can just trade there. And what spot means, it's trading, but there is no leverage involved. So you're just buying $1,000 worth of Bitcoin, for example, and if the price goes up 10% and you sell it, you know, you would then have $1,100 worth of Bitcoin minus a smidgen of fee, I guess. So spot's a very good way to just to practice when you first start, because there's no leverage, it's safer. There's less chance you're losing too much too quick. And then you've got margin trading. First of all, they'll go through futures tradings. Futures, they're called futures contracts. So they're just, there's a whole heap of different ones these days. There's, you know, most of the main cryptos have their own futures contracts going now. You've got perpetual contracts, which just go perpetually, and you get charged, while you have a trade open, you'll get charged a fee every day, right up until you close the trade. It's only a very small fee. And then you've got your Binance, you've got your crypto futures, so like Bitcoin futures, quarterly contracts. So every quarter, so every 3 months, they will close. So you can't hold your trades open once that contract closes. And they only charge a fee once, either when that contract closes at the end of the quarter or when you close the trade itself. And it's a larger fee. But if you're intending on holding a trade open a lot longer, like for a couple of months, then the fees work out a lot cheaper by doing it on the quarterly futures contracts. I mean, you can still do the perpetual futures contracts and hold trades open a long time, but the fees will start to add up. But, you know, as long as the market's going your way, it's still definitely worthwhile. And myself personally, I don't do a lot of what they call swing trading over the course of months. You know, I usually do a lot of smaller short-term trades. So the perpetual one is the main one I use. So that's what futures contracts are, and it's a very good trading platform. It's got a lot of features that the actual trading platform itself, where the chart is displayed, it's very, very much like it is on TradingView. It has all the same drawing facilities. And now margin, it's with the futures, you can change, you can sort of have a big variety of different leverages, right from 1-to-1 right up to 100-to-1. You can vary that at any time you like. With margin, there's sort of a set leverage that you can use. So some will have a 10 times leverage, some will have a 5, some will have a 3, depending on what crypto it is. And there's not as much usability, I guess, with margin. But the advantage of margin is you can trade a bigger range of different cryptos. So there's thousands and thousands of different altcoins. The futures contracts only really give you the option of a couple of dozen, whereas the margin will give you any crypto that's on Binance. You can basically, I think all of them, most of them anyway, you can trade on the margin with leverage. I'm not going to get into margin myself tonight. It's not a lot different really. But I'm just going to go to the futures page first. And just before I stop recording this video, just if I haven't done it already, remind me that I want to go back and just show you a few of the other options that Binance has other than trading. I'm not going to go into them, but I'll just point out what they are and everything. So with your futures contracts, you've got two different types, USD futures and coin futures. USD futures just means that you're trading everything against the US dollar, and the base currency that you're using in trading and earning is US dollar tether, USDT. With the coin futures, you're trading and earning whatever, if you're trading Bitcoin, you'll still be trading Bitcoin against USDT, but your earnings will end up as Bitcoin, stay as Bitcoin. So a lot of people like to keep their trading earnings as crypto. So as the value of crypto goes up, you take advantage of that as well. With USD futures, if you have a winning trade, you might win, let's say, $1,000, 1,000 US dollars. That'll be kept as 1,000 USDT. If the value of crypto goes up, it'll have no bearing on it. It'll still just mean you have 1,000 USDT there. With the Coin M futures, if you were trading did the same trade, and you made $1,000 worth of Bitcoin profit for a trade, that would sit in your account as $1,000 worth of Bitcoin. And if the value of Bitcoin doubled, which it very well could, because just over the last few months it's halved in value. So just to get back up to an all-time high would be almost doubling. So that could definitely happen. But if you had a winning trade and you made $1,000 worth of Bitcoin profit, that would sit in your account as Bitcoin. If the value of Bitcoin doubled, now you have $2,000 worth of Bitcoin. So that's just the difference between these two. I like to do Coin M futures because I like to use it as a nice tool to, increase how much crypto I own. At the moment, I have 3 trades running on the Coin M futures, Link, Ethereum, and Cardano, and they're all in. Wow, look at this one. It must have just jumped up a whole heap because I'm in 2,008% profit on that one at the moment. I looked at it earlier and it was only at 200 or 300. We better have a look at that. That's exciting, isn't it? I wish it was a really big trade and not just a little one. And so if you click on that, it takes you to the actual trading page, and it'll bring up a chart here for us in a moment. Now, I don't have a take profit on this either, so once it does load up, I will probably show you how to put a stop loss in. I already have a stop loss in, but I'm probably going to move it up further to lock in some of that profit. If you scroll right to the bottom, the chart will show up there in a minute. It's just being slow. Yeah, I didn't think that could have been right. It's only showing 126% profit there now. Damn. Being a bit slow, but it will get there, I'm sure. But while we're waiting for the chart to show up, if this is your first time on the futures page, they may ask just for a couple of quick details, nothing too extravagant. I actually forget what it is, but nothing much. But you'll have money in your fiat and spot wallet, but you won't have any in your futures wallet. So you'll just have to come down here to transfer. Click on transfer, and you're just going to send it from fiat and spot wallet to your coin futures, and you can select, whichever coin you want to send to it and send it through. Then you'll have it in your futures wallet, and you can trade with it. I don't know why the chart's taking so long. But the basics of this platform, other than the chart, which we'll get to talk about soon, I guess, is all of this here. So you've got two options. You've got isolated and cross-margin trading. You probably will never use cross-margin trading, but you want to check it. Isolated trading means I'm going to take $100 worth of capital and I'm going to put that in as the margin for a trade. If I don't put a stop loss and the market goes against me, I could lose that $100. Simple as that. That makes sense. We all understand that. Even if I've got like $10,000 in my futures wallet, I'm only allocating 100 to this particular trade. So the worst that can happen is I would lose $100. If you're using cross margin, then instead of just allocating $100 to the trade, I'm allowing all of my funds that I have on that platform to be used. So potentially I could lose the $10,000 on that one trade. I just not sure if there's a good reason to do that, why you would. If you're a competent trader that understands what he's doing, I think you will have set stop losses and everything anyway. So you're never going to want to get into a lot of drawdown. So there's no need to have that much extra margin. So as far as I'm concerned, I will only ever use isolated. I suppose other people do different things to me though. So definitely check that that's on isolated. The other one here is the leverage. It's on 5 times at the moment. And you can just change that. Some of the different cryptos will allow you to have 100 times. Some of them will only let you have 50 or 40 times, depending on which crypto it is. And I believe that your experience and how much you've been on here and your level of verification can also have a bearing on the leverage that they allow you to use. I'm not 100% sure on exactly how that works though, but you can. There's a lot of instructional pages and info and education on Binance as well, a lot of education, which is free for anybody that has a Binance account. So feel free to have a good look around Binance because there is a lot of info on there. Now with this, you can, like I've placed a trade at 5 times leverage and it's currently running. Right now I could increase my leverage to 20, but that would also mean my liquidation point is going to be a lot closer. So if the market goes against me, I could lose a lot more money a lot quicker. If you do increase your leverage, you can't decrease it. Okay, so before you decide you might want to increase it, then you need to make sure that you're happy with that for the life of that trade because you can't change it then. The only way to get back to smaller leverage is to close the trade out, reduce the leverage, and then open a brand new trade. I don't know what's going on with my chart. See if I can give it a refresh. That all sort of makes sense so far, guys?
Yep.
So far, so good.
Good. I'll try and get more technical then. I could get more technical if the chart had show up. I had it up just before the call. Anyway, we've got a bit more over here on the right to go through yet. So at the moment, I have 0.38 Ethereum available. So I've got a fair bit of Ethereum tied up in a trade already, but I still have that much sitting in my wallet that I haven't put into a trade yet. So if I just wanted to put all that into the trade, I could just click there, 100% of it, and that's going to at 5 times leverage. So it's 0.38 Ethereum that I actually have and own. It's sitting there to use. At 5 times leverage, that's going to let me place a trade of 1.9 Ethereum. So I'm really buying 1.9 Ethereum. Essentially, I'm buying it. I'm not really, but essentially it's the same thing. And, or you can just do 50% or 40% or whatever you like, or you can just type in the percentage there as well. or you can either have this showing as a percentage of your Ethereum or in the number of contracts.
So what's it costing you to leverage?
Not very much. I couldn't tell you off the top of my head exactly what the fees are. They are all showed there on one page, so we'll see if we can track them down later and have a look. But all the information's there, but I don't even really take note of exactly what the fees are because they're just very small.
But if you lose that as well, don't you?
If that's what I'm saying, I'm allocating $100 worth. If, for example, I'm allocating $100 worth of my crypto for that trade.
Yep.
The very worst that can happen is I would lose that $100.
Okay.
Because they will close that trade before you owe them money, so to speak. That's what they call the liquidation point. So if the market goes against you far enough that you're in $100 worth of drawdown, then they will close that trade. They'll get their money back, and they'll also have your money too because you will have lost it. And then you try and do a better trade next time.
Okay.
Now, the contracts vary in size and value depending on which crypto you're trading. So you sort of get used to it, but I usually just have it on the Ethereum, so I know sort of roughly how much I'm putting into each trade. Some people prefer the contracts, but not me. And I'm getting a bit frustrated with my chart not showing up.
It's trying to catch up to that 2,000%. That's what it is.
It must be, hey. I would have been really excited if it was on my Ethereum trade because it's a much bigger trade. Anyway, it must just be something to do with its connection to TradingView because it's not working on that one. You can still bring up a chart, the original chart, or you can have the TradingView view, which gives you all the drawing tools and everything as well. But even on this one, we can see this red dotted line through here. That's where I have my Ethereum trade placed. It's a long position, and it's obviously the market's above there, so I'm in profit. And if we scroll down here and check out my Ethereum trade, I have 0.3 Ethereum that I've allocated to that trade. So if I didn't place a stop loss, then potentially I could lose that much Ethereum. At the moment, I'm in 20.5% profit, which is 0.06 Ethereum. You sort of get used to what all the different values are eventually, but at the moment, that's like probably around about $150 profit in this trade now. If I closed it, I'm hoping it goes a lot further though. All right, so right over on the right-hand side, we've got this little edit button here. If you click on that, you can set take profits. So you can put in a value. So at the moment, Ethereum's worth $2,298. I could put a value in here, let's say $3,500 because I don't want it to happen. But if the value of Ethereum hit 3,500, then it would automatically close my trade and take profit for me. And the profit I would make would be 0.569 Ethereum. So that would be a big profit. And likewise down here, I have a stop loss set at 2,224 US dollars. And if the market now, like it's in good profit now, if the market turns and goes against me and hits my stop loss, because my stop loss is actually above my entry point, I will still make 0.01 Ethereum profit. So that's the main stop loss and take profit feature there. You can also, so at the moment I have, as I said, 0.3 Ethereum in this trade. I could come back up here, and you can take out a trade based off market value. So that if you're using the market value, the moment you click buy or sell, that trade will get placed and executed pretty much straight away. You can also set a limit order. So I might say, okay, if the market drops right down to here at 22.33, that's when I want it to take out a trade. So I put in 22.33. So if the market hits that value, I'm wanted to take out a trade of 25% of the Ethereum I have. And then I would click buy or sell, whichever one I was doing. And that trade would get placed, but it wouldn't get executed until the value of the value of Ethereum hit 22.33. And down here at the moment, I'm on the positions tab, so it's showing me all the positions I have running at the moment. Open orders, that would be like a limit order, except these are actually my stop, my stop market, my stop loss ones. But if you were to place a limit order, it would end up here in the open orders and until it hit that value, and then it would be executed, and then it would be an open trade, and it would be in this position here. Obviously, you have all your different histories as well. You can set a stop limit there as well, which is slightly different to before, but I don't want to make this a confusing video. So I think the best way to set take profits and stop losses is just from there. If you want to get technical and learn more, you can. Then you can do a few more things by using all of these and the reduce only ones and everything. But generally, until you're quite experienced, you don't want to play around too much because it can get confusing and you can make mistakes. There's probably no successful trader out there that hasn't accidentally clicked the wrong button here somewhere and lost money because of it. I know I have. Let's see if TradingView works now. For some reason, it's just not connecting to TradingView. But if it would connect to TradingView for me, it would be pretty much like this. I'd have exactly all the same drawing tools. Obviously, at the moment, it would just be on a black background though, but the colors on both TradingView and on Binance, you can change to suit yourself. So we did a little bit of a training on TradingView the other week, so it would be exactly the same. You can draw lines and pictures and write, tag and label things and all the same stuff that we looked at before. But it's not letting me do that for now for some reason. You must have a couple of questions about any of that by now, guys. Not
yeah,
really?
I'm still a bit confused with leverages, but anyway.
Yeah. Okay, so essentially you're borrowing money off you're borrowing money off the platform. On the margin trading, you are actually borrowing money off Binance or the people that have funds in Binance. And so you're borrowing that to place the trade and you get charged a fee for that. And the people that have the money on Binance, they could be earning a fee for using their money. You don't see that happen exactly. That's just is what does happen though. So yeah, you are paying a fee to borrow that money, but it's not very much. And so if I was to allocate 1 Ethereum to a trade on 5 times leverage, I could essentially take out a trade, which would be like buying 5 Ethereum. Even though I've only got 1 Ethereum, I can use that with leverage to buy 5 Ethereum. And then if the market went up 10%, let's say the market went up 20%, just to make the maths easier. So you buy 5 Ethereum, it goes up 20%, that would be the equivalent value of what 6 Ethereum was worth, you know. So you basically made 1 Ethereum. That's not exactly right, but just, you understand, just to make it sound easy. Then you close that trade, you take that profit. You've put 1 Ethereum in, you sort of borrowed 4 Ethereum to make that 5 Ethereum trade. So it goes up 20%. Now you've got 6 Ethereum. Now you close that trade. They get their 5 Ethereum back, and you have your 1 Ethereum plus the profit of 1 Ethereum. So you've basically now got 2 Ethereum instead of 1, and obviously just minus those few fees, which really are only small.
Yeah.
On the margin trading platform, that is literally what happens. You borrow money, you place a trade, you pay it back. So it's a lot more convoluted. On the actual futures contracts, it's a lot more like Forex trading, and you're not really borrowing money. You're just literally doing the leverage trade. And you're not actually buying Ethereum, you're just placing a trade on an Ethereum contract. So it's similar to placing a bet. You're betting that the value of Ethereum is going to go up. And if it does, you know, like you go to the races, you place a bet on the horse and you get good odds on that horse. So if you get good odds and the horse wins, you make a lot more money. It's exactly the same here. Even though you're not borrowing money, it's like at the races, you're not borrowing money, or hopefully you're not borrowing money to place a bet on a horse, but you're getting good odds on that horse. So if the horse wins, you make a lot more than you would if the odds were low. So that's how the leverage works on the futures contracts. So you just think of this as the bookie. So you don't have to borrow money, but you're placing a trade / bet. I don't like to call trading betting, but to make it sort of relatable, you're placing the bet, and the leverage is the odds that the platform's giving you. And you can choose the leverage though, which you can't do at the horse races.
So how far, obviously, does it drop from your buy price before you lose the race?
Okay, so if you are, and it will vary on different cryptos. Some of the smaller minor cryptos won't work like this, but for the main ones like Ethereum and Bitcoin, if I'm doing 5 times leverage, so if I place a trade here, like a long position on 5 times leverage, if the value of Ethereum loses 20%, 20 times 5, that's 100%. That would mean you'd lose 100% of the margin that you put into that trade. Yep. So like I was saying before, I'm allocating $100 for this trade. If it's at 5 times leverage and the market, Ethereum itself, loses 20% of its value, then I would lose all of that $100.
Yeah.
But generally you would also place a stop loss, which may only be like 5%. I'm just making that figure up. It depends on what the market's doing. But you might have a stop loss that's only 5% down. So if you hit that stop loss, 5 times 5, you're only going to lose 25% of your $100.
Yeah.
And it works in the other direction as well, of course. If the value of Ethereum goes up 20%, you're going to double that $100 that you allocated to that trade.
So once you've set it, what's the time? If you don't put a stop in or a take profit in, what's the timeline? Is there a timeline with when you leverage?
There is no timeline, not on the perpetual futures. Yeah. It'll just keep going until you either close it in profit or it goes 20% down and you get liquidated.
Yeah. Okay.
On the other option is you've got the quarterly ones. So on this one here, it's 24th of the 9th is when this quarterly contract will close. So this one does have a timeline. It's got to be finished before then. You've either got to close the trade yourself before then, or if it reaches that date, they will just close that trade for you and you'll take whatever profit or loss it was in at that time.
Yep.
Okay.
That's why I asked the question, because I've been trading leverage on Forex and crypto for quite a while now. So it makes sense to me, but I guarantee you it didn't when I first started. But I've just forgotten what sort of questions you need to ask.
All comes back to being able to read the market, but doesn't it?
Yeah, no, exactly. It's all the same. But the beauty of leverage, like if you've just been doing a little bit of spot trading, so if you placed a trade here and it went up 20%, you make 20% profit.
Yeah.
If you're doing, 5 times leverage trade and it goes up 20%, you've doubled your money. So yeah, it obviously magnifies your profit, but also your loss. And if you get good at reading the market and you become a good trader, then you will be doing leverage trade. There's no risk about it, because that's where you make the bigger money.
Yeah, I want to know how you picked that. If you scroll across your page there a little bit to that back there, where are you? There, that one there. No, the next one along, I think it was.
What are you trying to look at, sorry?
The next, after there, the next hump. So
this one.
Go to
this one.
That one.
Yep.
How did you pick that fall? Like that was just green, going up, and then all of a sudden, bang! Like it's not a massive drop, but it's a drop. And if you had a small bet placed in there with leverage, you could have quite easily lost your day.
Yeah, well, the thing is, 20 like at 5 times leverage is only pretty small.
Yeah.
I did originally. I forget where I've had this trade on for a little while. I think I placed this trade here.
Yeah.
As it broke out of that pattern, it was going up. I placed a trade here.
Yeah.
No, that can't be right either. I forget when I placed it. I'll have a look on TradingView. I'll be able to tell you what I did there. But yeah, so you can. I would have obviously had a stop loss in position at some stage. At the moment, my stop loss is sitting about there, so that even if the market goes against me, I will still take some profit.
Yeah,
and
but
on these smaller leverage ones, I'm generally trying to. I'm hoping that at the moment. Let me jump over to TradingView. This is getting off the subject a little bit, but at the moment we've got an upward triangle or a bullish triangle forming here. So I'm hoping that, as it should do, it should break to the top and go up. And if it can break higher than what it did here through this resistance, then it will go up a fair bit further again as well.
Yeah.
Potentially could be, a good bit of movement going up here now.
Yeah.
Well, you've got to be a little bit careful when it breaks out of a triangle like that and previous resistance isn't too far away. It may just break out, come to here, and then come down again. So keep an eye on it, or take some profit here and then reevaluate. Or what I like to do is just move my stop loss up further to lock in some of the profit. So getting back to your question, because it was a good question, like looking at that other chart, you couldn't see any reason why I'd place that trade.
No.
What I did was this is like a flag formation here, or a pennant formation here. When it broke out of this, I placed a trade. So this is where I placed it, and it shot right up here. Just trying to remember exactly how it all played out. I think I did take profit, and then as the market bottomed out here, I think I placed a trade here, and then I placed another trade up a bit higher, and that made an average position of here. So that was profit that I closed and took. No, I've moved that in the wrong position now. So that was why I took profit there. But this trade here that I have running now, I placed one position about here when it looked to be turning. Only a small position though, because it was this big drop here. Until the market really goes above that red candle, I wasn't sure it was going to be moving up too much further. So but I wanted to try and, because it's such a big candle, I didn't want to wait till it was here. So I placed a small position here. I would have had a stop loss there. And then as the market got up above that red one, I was more confident that it was going to keep moving up. So I placed another position. And what the futures platform does is it'll just give you an average of those two. So you still only have one position, but the average of the trade you put here and the trade you put here.
Yeah, okay. Yeah.
So that's how I ended up there. And then the market came up and that was looking good, but then it came down to about break even, then went back up again. And when I saw that it was forming this upward triangle because it had bounced off this trend line a couple of times, that's when I was confident that it was going to keep going up. So I put my stop loss above the entry point. So it's risk-free now. I don't have to watch it too closely. I can sleep soundly knowing that worst case scenario, I take a small profit still.
Yeah, yeah.
Hopefully it goes up further. Before I go to bed tonight, I will make a decision though, because this market, I could go to sleep tonight and it could shoot right up to the stars. And then by the time I wake up, it could be back down here again. In big profit. And then I wasted it because I didn't have anything set up. So tonight, before I go to bed, I'll either move my stop loss up further if it's significantly moved up further, and or probably both. I'll put a take profit line in somewhere as well. I'll have a look back here further and see where the next resistance line is after this.
Yeah.
And I'll make a decision myself on how far I think that the market could possibly go and put a take profit in, just so that if it does go up and then down, I should get something out of it. That's just sort of, that'll be another lesson in itself, how to manage a trade. Like first off, you've got to learn to read the market, learn to put in a trade. But then after that, there's a whole heap of managing you can do, particularly if you're holding a trade long term. Sometimes you'll close a little bit of it to take some profit, just to lock in that profit. Sometimes you'll move the stop loss up. You can even use a trailing stop loss feature so it automatically moves up with the market.
Right.
That can definitely be good. It can also work against you if you make it trail too closely behind, because you do have to let the market do its zigging and zagging, because it's always going to do that.
Yeah.
But yeah, so that'll be a whole lesson, managing trades. But just quickly before we finish this little recording, let's just get back to the main page of Binance. I don't even know what the main page is now. There's too many pages, but we're talking a little bit before about DeFi. Binance offers a whole range of DeFi type options as well. So you can stake your coins, any of your crypto in Binance, and you'll earn an annual percentage paid daily most of the time. And that'll be down here on the earn feature. So if you click on earn, I just want to whiz through this. So you can click on earn and you can take some of your Ethereum out of your spot wallet and you can put it into the earn wallet. And while ever it's sitting in there, you'll be earning a return on it. Pool, they're sort of what they call liquidity pools. They combine two different cryptos together. Usually it's like on Binance, quite often it'll be BNB, which is their own token, and combined with another coin, and you hold both of them together and you'll earn a higher interest rate. Yeah, depending on the smaller, the less significant type cryptos, the newer ones that haven't proven themselves or anything, if you're holding them ones, you'll tend to get a higher return, but the risk is higher because the value of that coin could drop a lot while you're holding it. The way I look at staking and DeFi is if it's a coin that you're willing to hold anyway, so like Bitcoin, Ethereum, Cardano, that's for me. If you're willing to hold it anyway, you might as well have it in DeFi so that you're not only holding it, but you're earning interest on it. I held crypto for years without earning anything on it, but now I hold it on a DeFi platform, so that I'm earning an annual percentage, and it's also paid daily, so the compounding is good as well. The other side of DeFi is taking out a loan, and you can also do that through Binance. So you can use your crypto as collateral, to take out a loan, do whatever you like with the loan, and as long as you pay back the loan, you still own your crypto. So like at the moment, crypto value is a lot lower than it was 3 months ago. So I wouldn't want to sell my crypto. Let's say I wanted some money for something, and it doesn't matter what it is, but money for something. I wouldn't really want to sell my crypto now because the value is a lot lower than I know it will be in the future. So instead of doing that, I can use that crypto as collateral to take out a loan and then do whatever I want with that loan. And it's like any loan, of course, you've got to pay it back. But that way you don't actually sell your crypto. So if the value of crypto, and I have done this before, and I'll talk about that after this recording, but I've taken out a crypto loan. I've taken out a loan using my crypto as collateral, and I invested the money I got for that loan. I've invested somewhere that's earning a lot more than the interest I'm paying on the loan is. And then as the value of crypto goes up, so I might, let's say I had $2,000 worth of crypto, I took out a $1,000 loan on it. When the value of crypto goes back up to where it was 3 months ago, that $2,000 will now be, that $2,000 worth of crypto will now be worth $4,000 worth of crypto. I can sell $1,000 worth, pay off the loan, and still have $3,000, which is more than I had to start with anyway. So that's I mean, DeFi opens up so many doors for that reason alone. And there's a lot of different, there's so many different DeFi platforms around now. I guess there are some dodgy ones as well, but sticking with the main ones, I do have some crypto held in like a liquidity pool, not on Binance, but on another one that earns really, really high interest. It's only a small amount though. But all of my other crypto, like a major amount of my crypto, I hold in DeFi. If I held it in my wallet, I'd be earning 0% interest. On the DeFi platform, I can earn up to 8% interest per year. I've also got, I'm actually holding actual US dollars, not USDT, but actual US dollars fiat currency. I'm holding that on the platform as well. And I can earn up to 10% interest per year. If I had that in the bank, I mean, I can earn up to 12% interest. I'm currently earning 10.5. It depends on a few other factors, what percentage you get. But that same money, if I kept it in my bank account, I wouldn't even be earning 1% interest on. So I've put that into a DeFi platform, not Binance, but getting off the subject, and I'm earning 10% per annum on it, paid daily, compounded daily. And there's no risk there as well. I mean, some DeFi platforms may be a bit dodgy and there may be risk involved. Whenever you're doing the liquidity pool, there is risk involved because, you know, they're coins that could lose value. But if you hold USDT or actual US dollars on the platform, there's no risk because USDT never changes value. US dollar is always worth $1 US worth $1 US. One USDT is always worth $1 US. So there's no variation there like there is with any other crypto. And depending on the platform you're on, you can, you know, a lot of them are actually physically insured, and you know, insured through third parties and everything as well. So it's as safe as money in the bank. You're just earning a lot more interest on it. And most of what I was just talking about wasn't Binance, but Binance do offer the majority of those different options as well. And honestly, there's a lot of options there that I don't even know what they are at the moment because I haven't got around to looking into it.
Are you better to hold US dollars or Australian dollars?
The platform I've got mine on, you can't actually hold Australian dollars.
Yeah.
Most DeFi platforms are only crypto oriented, but there are some that sort of bridge the gap between normal banking, which is centralized finance, and DeFi banking, which just stands for decentralized finance. So they bridge the gap, allow you to do both. And I think that's really is the way of the future. People talk about crypto or DeFi being the way of the future and the banks are going to disappear. The banks are smart enough not to disappear, but they'll get their share of the pie through something like what I'm talking about, where you can, you know, crypto and fiat currency combined, at least for the moment. But yeah, so lots and lots of options. But if there's no more questions about Binance, I'm going to stop this recording, and then we can go into exactly what I'm doing with DeFi if it's like.
Just one comment, Les, if you're using your credit card in Binance, be very careful that the bank doesn't charge you exorbitant fees.
Yeah, so some banks, if you're using your credit card to deposit, can charge big fees just because they're against crypto, and they, you know, sometimes it'll come up as a gambling type fee or something stupid. I've seen that happen for sure. If you use a debit transaction, that's fine. They usually won't do that, or normal bank transfer, they won't do that either. But if they do ever hit you up for a big fee, go in and complain. They'll either give you your money back or you go somewhere else. It's just banks being a little cantankerous sometimes. Okay,